safety. Let's save together.
29th, 2014 meeting of the Santa Barbara City's Finance Committee. Santa Barbara City Council's Finance Committee will now come to order. Are any members of the public wishing to speak on items not on today's agenda? Seeing none, let us go to our first item, Mr. Samario or Ms. Wilson.
Hi, my name is Jeannie Wilson. I'm the Treasury Manager. Good afternoon, Chair Francisco and committee members. Today we're going to be, we've got two items. The first item is the annual investment policy. You see this policy once a year. So I will provide a brief overview of the policy. Thereafter, I will also be presenting the June 30th quarterly investment report, the June 30, 2014 quarterly investment report. And we'll start off with the investment policy. Basically, the policy is governed by State Code, Section 53600. It does establish the procedures and guidelines that will ensure that the prudent management of city agency funds. It does incorporate all of the California Code sections required into the agency's investment program. Overall, the investment policy has some umbrella-like requirements. I'll review those with you briefly. It does establish the legally permitted investments. It does not require an annual adoption of the policy. However, we do believe that it is best practice to bring that policy to council each year, July of each year. Therefore, we're bringing forward to you today the policy for the fiscal year 2015. Scope of the policy, we do pool our funds. That means funds for all of the city's various funds are pooled together. This does exclude the bond funds, but because we do pool funds, we do allocate interest to the various departments and fund types on a monthly basis. We allocate that interest that is earned. The statutory investment objectives and priority, basically the city does overall have a strategy to invest as passive, which means that investments are generally held until maturity. And as you know, we invest in 5-year, 4-year, 3-year, and shorter term investments, but in most cases we just hold those into maturity. The policy also authorizes and sets forth the financial dealers and institutions and how we select those dealers, defines the suitable and authorized investments, and it does establish our investment parameters. Again, a maximum of 5 years, our average maturity of 2.5 years. It does also establish the reporting requirements. So monthly you will see an investment report that's brought forward to the City Council. You will also see quarterly investment reports to the Finance Committee and the City Council. And as I mentioned earlier, we will also bring forward the annual investment policy each year in July. We are not recommending statutory changes at this time. However, there was one amendment to Section 53601.8 and 53635.8. This does allow for the use of private placement services for the investment of certificates of deposit and deposits. This is a change that will sunset in January of 2017. However, at this time, staff is not recommending that we revise the investment policy for this investment type. We still do and can invest in certificates of deposit. We just don't use a program to do that. So we still feel that we have what we need to invest in those CDs with banks. Generally, those are banks that are local banks.
Ms. Wilson, one question about that. So allows for the use of private placement services. What exactly does that mean?
What it means is there's a program out there. The only one that I'm aware of is a program that allows participating banks to kind of pool in, and the reason they do that is so that since FDIC insurance is for each bank for CDs is $250,000. What it does is it allows you to invest with this pool and locate a participating bank with that pool to invest in higher dollar amounts. Right now, the city can invest in certificates of deposit in excess of $250 because we collateralize our certificates of deposit with the banks that we're working on or working with. And generally, as I mentioned, those are banks that are local banks. So we negotiate those CDs with those local banks.
Okay, thank you.
So the pool gives you the ability to
use the FDIC insurance, and that's the advantage. as
Right,
opposed
you
to
can
more
invest
than
larger
250.
amounts, and then they find those banks and then basically parcel out your investment
I see.
and then manage that. So there is a cost for that. So staff would need to look at really what is the benefit of pulling your money and then paying for that additional cost to have it managed versus negotiating directly for CDs with local banks.
Are they marketing it with a higher yield or something? What is the attraction that they're?
You know, this program was popular a number of years ago when rates were higher. I really haven't heard that much about it. And so we really haven't done much research or looked into whether or not this would be advantageous for the city. We can do that, and we can revise the policy at any time. Again, this does sunset in 2017. We just haven't had the opportunity to do that with this change.
Well, it's probably worth looking at to
Yeah,
know. Yeah.
I would agree. And I've spoken to a couple of our brokers, and both sides of the fence, basically just preliminarily, it's another tool we could have. We don't have to use it, but the risk of managing your pool, making sure you're not exceeding any of those. If we invest directly and then they also invest, or is there potential to exceed that $250,000 versus what we do, which is collateralizing, and then also would the rates really be that much better or not? So.
Mr. Chair, I mean, I was getting that, like, the pool would be 40 banks getting $250,000. If it was $10 million, it would be 40 banks getting $250,000 apiece, kind of thing. And then you might have the risk of the pooler being the one who's not properly insured. I mean, then that's where the hole in the boat happens. And you know, we watched one of those. What was that? 25 years ago with Orange County, where it was too good to be true because it was too good to be true. And I can imagine some problems with spreading the money out like that.
There might be
as
some
well.
challenges. It's just
Is that the deal, that it would be putting $250,000
in
a whole bunch of banks?
It allows you to do that.
Okay.
It basically
So that is
parcels it out.
That is the tool. Yeah.
So that you can be within that threshold.
You're
the
insured.
FDIC
Yeah.
threshold.
Okay.
Yes.
Thank you.
Okay. I went ahead and included some slides just of some historical data for interest rate activity. The first year, it's 10 years out, or actually from 2000 to current date. Just interesting to see where interest rates, the portfolio and interest earnings have been. So we can see the decline. Current benchmarks, again, since 2000, the 2-year rate, our portfolio rate, and then the LAIF rate. They've generally trend. Our portfolio rate is higher than the 2-year and the LAIF rate, as you can see per the graph, but you can also see how interest rates have declined historically. And then this is our portfolio as compared to the 5-year Treasury note. Again, it trends along with it. Again, you'll see the decline historically. I just thought that was a little interesting information there. So we'll move on to the quarterly investment report unless there are any questions. Okay.
So no major changes in the investment policy? Okay.
A recommendation to adopt it.
Okay. So moved.
Second.
Any further discussion? All those in favor? Aye. Motion passes.
Okay. So June 30th, 2014, you're in the quarterly investment report. Basically, and as you can see from the graphs that I previously showed, the treasury rates have remained low. The 5-year, since a year ago, is trending a little bit higher. It's been an interesting year. Those rates have jumped up a couple of different times and then decreased. There was a bump up 2 weeks ago, and they're still they bumped back down. So they're still fluctuating, but generally slightly higher than they were a year ago. Fed forecast anticipates, again, low yields continuing into the near future, but we have seen them jump up a little bit, and then they decrease a little bit. So that's the environment that we're in. And the overall yield slightly down slightly this quarter, 1.16. portfolio interest at $470,000 for the quarter. Again, for reference, the 2-year rate is at 0.49%, 3-year is at 0.98, the 4-year 1.34, and the 5 years trending at about 1.7. Overall, our portfolio cash and investments, $178 million, and distributed amongst our various investment types. Comparisons through 2011, 12, 13, and 14, you can see that the city's portfolio has trended slightly low or higher than the other rates that we just talked about, and not a whole lot of change in the last few years. You can see the rates there. Our portfolio measures, again, we are within our 2.5 years of maturity overall, and our investment income has been fairly steady the last 2 years. Here's our treasury curve of the rates, as we talked about a little bit ago. The 5-year at 1.7 again, and the 2 years at 0.49. And LAIF remains very, very low at 0.24%. And that's pretty much it. If you have any questions, I'd be happy to answer them.
No questions. We need to recommend this to council as well.
So moved.
Second. Any further discussion? All those in favor? Aye. Motion passes unanimously.
Thank you.
Thank you both. Meeting adjourned.